Monday evening talk. Today, inshallah, we're going to have Khalid Mahmood Saab, who is going to give a very interesting talk. So stay tuned. I'll give a brief introduction as usual. Um, so Khalid Mahmood Saab is a chartered financial advisor and CEO of Unbiased Independent Financial Advisors Limited, based in London. He is a chartered fellow member of the London Foundation for Banking and Finance and a chartered MCSI member of the Chartered Institute for Securities and Investment. He has over 30 years of experience advising clients on a wide range of financial products, specializing in pensions, investments, retirement planning, inheritance tax planning, and Sharia-compliant pensions and investments. His work focuses on helping clients build, manage, and protect their wealth in structured and tax-efficient manners. So please welcome Khalid Mahmood Saab. As usual, I'd just like to tell our audience, please use the chat function to ask questions. We will get around to the questions at various points in today's presentation. And as you can see from the topic, investments are, relevant to everyone. So I'm sure everyone can get a lot out of the talk today. So use that chat function. About 15 minutes before the end of the session finishes at 8 o'clock, we'll put out a poll, and we'd really appreciate everyone's feedback. So I'll introduce that when the time comes, but please do fill out the poll. It helps us a lot to gauge how these talks are going and future improvements. So Jazakallah for everyone that's tuned in. I'm sure we'll get more participants as well in the audience. So over to you, Khalid Saab. Welcome.
Jazakallah for the introduction. Bismillah Rahman Rahim. And yeah, thank you very much for the introduction. I will share my screen. Do you want me to start now or?
Yes, please. Yes,
Yeah.
please. If you share your screen and then we can begin.
Mhm. Hello, can you see me? My screen?
Yes. Yes, that's fine. Jazakallah.
Okay. So how to build a tax efficient investment portfolio, which is tax efficient. Hold on. Yeah, okay. Can you see me? Yeah, the screen is full, yeah?
Yes, full screen. Jazakallah. That's great.
So how to build a tax-efficient investment portfolio, maximize returns, minimize tax, and structure wealth properly. Yeah, that's today's topic.
Yeah.
So why this matter? Most people focus on returns. Like if you are investing, just they're looking for returns. So very few focus on tax efficiency. So over the time, tax can reduce returns significantly. What does that mean? If you are saving money in the tax, so that can be reinvested as well. So for example, if you are thinking to invest £100, and if it is tax efficient, it could be 125, it could be 150 pound. So the growth will be for the 150 pound rather than just the 100 pound. So poor structure leads to unnecessary losses. So if the structure is not good enough, then the chances are you can lose unnecessarily. If you are not investing anywhere, and if it is in the cash, so the inflation can erode wealth further. For example, we have the inflation a couple of years ago about 10%, and now today is about 3.3% tax inflation. So anything you have in the cash, that means you are losing money every year. So, for example, if you have £100,000 saved somewhere for 3 years, so it's not £100,000 anymore
Mm.
because the value what you are going to get is not for 100,000. It could be less than something like £85,000. So, what we will cover today: how tax affects your investments, the key tax wrapper available, how to structure investments efficiently, risk profiling and portfolio construction, how to build a diversified portfolio, and common mistakes to avoid. And if we have time, I will show you uh, a portfolio as well. So the problem with poor planning, typical issues we see is too much cash sitting idle, as I discussed just now, that the cash is in the bank account and doing nothing. Investments outside tax wrapper. If it is not invested in the proper way, then the chances are you may be taxed or you cannot save as such you should be saving. So
Mhm.
overexposure to one asset or sectors.
Mhm.
Yeah. Overexposure to one asset or sector. That means that so your investment is in just one sector. For example, last couple of days ago, actually, I met a guy. So he has invested everything in the gold, and when he invested in the gold, that was time was gold was 129 pound per gram, and
Mhm.
then it came back to less than 100 pound. Now it's again 109.10. But that was the problem, that when you have just one asset or just one sector you invested in, the risk is very, very high. So, so try to minimize by diversifying it. So no long-term strategy. Usually people don't have a strategy for long-term, 5, 10, 20, or 30 years. The young people like you, Aji, like
Yeah.
you should be planning for at least 35, 40 years ahead. Uh, no coordination between personal and company wealth. Those people who are self-employed and are directors, so it could be coordination between personal and company wealth. The result will be by having that these problem, low returns, higher tax, unnecessary risk. Okay, before choosing investment structure is the key. Main tax wrappers are ISAs, individual saving accounts, pensions,
Mhm.
bonds. Bonds can be onshore or offshore bonds. General investment accounts, GIAs, and company investments.
Mhm.
So we start with, first of all, with the ISA. So that is a tax-free investing. So no income tax, no capital gain tax. So annual allowance available. So ideal for long-term investing, building tax-free income, accessible capital. Accessible capital mean you can access anytime, whenever you
Mhm.
need it. So annual ISA allowance is 20,000 per year.
Yes.
And if it is a husband and wife, you can have 20,000 on your name. The 20,000 can be on the wife's name. So that is 40,000 saving. And if you have children, it could be 9,000 each as well. Types of ISA is cash ISA, which is a savings and has low risk, like just a cash ISA.
Mhm.
Stocks or saving account, kind of saving account. Stocks and share ISA, it could be investments, higher growth or potential. The investments as could be open market, kind of any stocks and share. It could be Islamic or Sharia-compliant investment. It could be ESG investment. It could be active or passive funds as well, depending on person's uh, attitude. So lifetime ISA. So that you can contribute up to 4,000 per year. For young people who are not homeowner, it is a very good wrapper. So government bonus of 25%. So if you add 4,000, the government will add 1,000 pound in it. So it's
Mhm.
automatically 5,000. So that can be in a year. So must be open when your age is 18 to 39 and can contribute until age of 50. Used for first home or for retirement. So after the age of 50, if you have not bought it any house, so that can be transferred into your pension, or you can withdraw it as cash.
Mhm.
So junior ISA for children under 18, and their annual allowance is 9,000. So no tax on growth or withdrawals. Fund funds accessible only when the child turns 18. I've seen people who have 200, 300, even half a million pound uh, in ISA for one person, because they are adding the ISAs gradually every year and with the performance. So they have a decent size of a pot of an ISA. Obviously, here I'm not expecting everyone can invest £20,000, but what I'm saying is it could be a decent size, anything from smaller to a decent size of the ISA. Why I'm saying is that when you get retired or vulnerable, or when have no work, so you can withdraw the money and there is no tax on the growth. Pensions, highly tax efficient. So tax relief on contributions. If you are contributing £100, it's going to be 125 same day. And if you are a high rate taxpayer, you can claim another £20, 20% when year end, financial year end by self-assessment. Growth is tax-free, no tax on the growth, and ideal for retirement planning, long-term wealth accumulation, high earners, and for higher earners and directors, it is very, very useful. I will explain you that in a minute. So long-term wealth accumulation, especially those who are khudam, they have started working now, for example. So it's a good idea to contribute in pensions, maximum. Even my children, when they comes to me, I said, look, whatever you can contribute into pensions now, that will help you. And some of the companies, they are offering matching your contribution. For example, if you contribute 10%, they will contribute 10%. Otherwise, the minimum requirement for any company is 3% under the auto enrollment law. So, so if you contribute more, you can get more from the company as well. So, which is kind of an extra income. So, if you get another 10%, for example, from a company, so that's your increase in salary, and that investment will be for long-term wealth planning. So, the annual allowance is 60,000 per year. Now, some company directors, if they are self-employed, their company can contribute £60,000, up to £60,000 for the directors. So what does it mean? That is a taxable allowance. So they don't have to pay tax on they don't have to pay the corporate tax. They don't have to pay the dividend tax. Now, corporate tax is 19% and 25%. The dividends can be up to 30, 40 or 45%. So all that can be saved by contributing into the pension. So carry forward as well, so you can unused allowances from last 3 years. So if you have a pension at the moment and you have not contributed in last 3 years, you can use unused allowance. So this is the most tax efficient investment vehicle available at the moment in the UK. Previously, it was even outside of the estate. That means it did not came into the inheritance tax. But from next year, the law has changed and it is coming into inheritance tax as well as any other assets. So investment bonds. So tax deferred, no immediate tax on growth. So investment bonds could be onshore or offshore bonds. There are different types of bonds. It's in detailed discussion, not been used a lot. But yes, tax deferred, no immediate tax on growth, useful for income planning, can be assigned for tax planning. Estate planning, it's a good wrapper for inheritance tax planning as well. High rate taxpayer is good for high rate taxpayer as well, and long-term structure withdrawal. So if somebody wants to withdraw, usually 5% is tax-free. Every year you can withdraw 5% of the size of the bond. So that is a long-term structure withdrawal. General investment account. Now, first of all, we discussed the ISA, then we discussed the pensions. And now we're talking about the general investment. If you have extra money, disposable money, rather than sitting in the cash, it can be invested in a general investment account. So that is fully flexible, no contribution limit, but it is subject to capital gain tax. and dividend tax applies as well if they're getting dividends out of that. Ideal for excess fund beyond ISA or pension limits. It could be short to medium term investments. So whenever you want to invest, you can invest. Whenever you want to withdraw, it can be withdrawn as well. Company investments. Now, if you have a limited company, a lot of companies or directors, what they do is at the end of the year, they pay corporate tax, but they do not withdraw the money because there is a dividend tax will apply up to 40 or 45%. So the surplus company cash can also be invested rather than sitting in the bank account doing nothing. So that can also be invested. So avoid idle cash losing value. So number one thing is it will lose the value. And number two, if the growth is better, then it can be helpful to pay the tax. So the corporation tax implication and consideration you need to make is investment structure, long-term strategy, and corporation tax implications. So very powerful for businesses owner when used correctly and when they have a surplus funds. I think I stop here,
Mhm.
and I have talked about the products. If
Yeah,
anyone have a question at the moment, I'll
Khalid
take the.
Sab, I've got I think you've touched on a few really important points. I just wanted to ask some questions of my own as well. You know, when you talk about the diversification, particularly for, you know, young members that are maybe just getting into work, what kind of maybe so from a person's disposable income, so after they're done with all their bills, the money they have left over, how would you advise people to what percentage should they maybe invest in an ISA? What percentage do you think would be worth putting into maybe something else as well, like gold? What would your advice be on how someone might diversify?
Okay. The most important thing is the pension.
Yeah.
If you're if you are contributing 12 to 15% minimum contribution in the pension, that should be fine. Then the rest of the money, you need to have at least 2 to 3 months cash in your bank account. That is for the emergency fund. Now, above that, you can invest in ISA. ISA is the first priority for yourself, for your wife, and then for your children as well. And if you have left some more surplus funds, then the general investment account.
Okay.
All right. So that's how it should work.
Perfect. And obviously the focus is on this tax efficiency. So the options you've given there, I think, are really important because it means that we each one of us has a tax-free allowance in terms of these investments that everyone should be getting maximum benefit from. So um, I think that's the biggest takeaway there to obviously plan the tax, and pensions should be taken very seriously. I think we youngsters sometimes we overlook the importance of pension. And I've seen a trend, for example, when I first started my career, that people sometimes opt out of pension schemes because they want sort of more money in the short term. What would you advise to people like that if they're thinking of potentially opting out of pensions?
I always say don't opt out. Do not opt out and try to contribute maximum. And then ISAs.
Yeah.
And then if you have surplus money, then into general investment account.
So Khalid,
Subject to you have to
getting
have 2 to 3 months
yes,
emergency funds. And
yes.
for example, if you want to buy a house, so yes, so for example, if you have 60 or 100,000 pound um, savings, so
Hmm.
rather than it is saving by in the cash, it could be invested, and
Hmm.
then it could be withdrawal for the
Purchase.
purchasing a house as a deposit.
Khalid Saab, if someone had their intention was to invest into an ISA, how would you advise between a cash ISA or a stocks and shares ISA?
Yeah, that I will cover you in a minute.
Okay, perfect.
Yeah. So any other question from any of the audience?
Yes, Assalamu alaikum. Yeah,
Walaikum
I
assalam.
just have one question. Is it, I mean, I guess it depends on how much money you have, but is it worth using an independent financial advisor or go your own way, by doing research?
The best option is to talk to a professional. That's always advisable.
Yeah, Jazakallah.
Yeah.
Would you say that's the best route for anyone or over a certain amount?
Well, Dr. Sab, you are a doctor. You never say anyone to have a cardio operation at home, can you? You cannot say that. So same as,
It's a
we
fair
have
point.
financial advisors and people are making investment by themselves. But most of the people, they don't understand that. For example, I'll tell you one thing that people sometimes they think that this is my priority. For example, I've talked to so many people. I'm an IFA, that's my business. I talk to so many people, and when I talk to them, when I take the attitude to risk, they're asked the questions. So whatever their priorities are, their investments is entirely different. And I explain them straight away, look, this is you want, and this is where your money is, you know.
Mhm.
So it's good to have an advisor to
Yes,
to talk to.
yes.
All
Jazakallah.
right.
Yeah, we'll carry on then. I think we've got one question that's asking, would you recommend stocks investment? But I think you're going to come to that, inshallah.
Yes, inshallah.
Yeah.
Okay, risk profiling. Now the question again, that where do we invest? So it depends on the risk. It could be very low risk, low, medium, high, high, very high. It could be anything. So usually the risk scorings are sometimes it's 1 to 6, 1 to 5, or 1 to 6, or 1 to 10. I usually have a 1 to 6. So either risk is very, very low, low, medium to high, high, or very high. So it depends on everyone's circumstances and everyone his attitude. I'm not saying that you should invest in a very high risk, whereas your own status is a medium or low risk. So that is very important. Then capacity for loss, how much you can easily lose. The market is not going up and up all the time. It can be go bit up and down. And investment time frame, is it for a 6 months, year, 5 years, 10 years, or 30 years investments? For example, if you are investing in pensions, it's going to be 30 years. And when do you need the incomes? Straight away or later on? So the risk is not about the markets, it's about you, the individual, your individual uh, circumstances or your individual preferences. So building a diversified portfolio. Okay, so for example, if you are in a medium risk, well, I tell you that most of the UK and in the worldwide is a medium risk. And the strong portfolio will have the equities, bonds, either and fixed interest, and that says stability, alternatives, alternative market, and cash. Uh, Diversification helps reduce volatility, improve consistency, and protect downsides. Now, the diversification are number one is geographically, number two is sector wise, and then either is equities or bonds, gilts, corporate bonds, or fixed interest. Now, when we are talking about, for example, medium risk, I'm just giving you an example.
Mhm.
Usually it is 60% equities and 40% fixed interest or bonds. I'm talking about open market. I'm not talking about the Sharia compliant. Sharia compliant works the same way as well, like 60% equities and 40% sukuk. rather than saying bonds, they said sukuk. The equities were Islamic. So for example, if it's a medium, then obviously 60, 40, 60 mean equities, 40 mean bonds, and high mean 20, 80, 80% equities, 20% bonds, and very high is 100% equities. That's how most of the companies or IFAs, they measure the risk profile. Now, asset allocation, so research is very important when you are researching or we are researching any assets where exactly we're going to be investing in. And that is very, very important. I will show you the portfolio, which will explain you in a bit more details. Now, the key decisions are equity versus fixed income split, geographical exposure, and sector diversification. That's what we do usually. Or if you want to do DIY, that is the most important thing you need to do. So tax-efficient portfolio structure, for example, ISA is a tax-free growth and income. Pensions are long-term tax-efficient accumulation. GIA, additional flexibility. Bonds, tax planning and income control. And company investments are business surplus. Common mistakes to avoid: holding too much cash, ignoring tax wrappers, chasing short-term returns, and lack of diversification, no clear strategy. So you should not have too much cash. It should be in the tax wrappers, and short-term return is sometimes not a good idea. And diversification, I just gave you an example of somebody has just invested all of his money into one sector, which was gold, and he lost, and no clear strategy. So mistakes often cost more than the fees. So yeah, so have an advisor will cost you less than the mistakes. The bigger picture: good investments planning is not just about returns, it is about structure, it is about tax efficiency, it is about long-term discipline. What you gain from this approach: lower tax liability, better long-term returns, more control over income, reduced tax, and stronger financial future. It is not about finding the best investment, it is about the right structure. A proper review, everyone should review his investments by himself or with an advisor at least once in a year. So which identify inefficiencies, optimize tax structure, build a tailored portfolio, align investments with your goals. This is me. I do not have a lot of time now to ask a question. What I will do is I will show you a portfolio which will help you to understand how a portfolio is made. And then at the end, we will take questions. ठीक है, वजी साहब?
Yes, that's absolutely fine. Jazakallah. Go ahead.
Okay. So what I do is usually, sorry. Okay, can you see that?
Yes, we can.
Okay. So what I do is I usually choose, in this scenario, I chose 4 funds, and all these four funds are in the medium risk. That means 60 and 40, 60% equities, 40% bonds. So I will explain you how it works here. These funds are open-ended investment funds. And these are, I will explain you that how exactly it is diversified. And it is a basket of stocks and shares. And within a fund, it is already diversified. But to have more diversification, we have more funds in it. Now, I changed the name fund number 1 because I don't want to show you the name of the company or the fund name, because then it comes under the advice, and advice cannot be generic. It's a generic information I'm showing you. So this fund, for example, so this is a performance in last 5 years. So from March 21 to March 22 is 11.95. Next year is 1.26, 11.95, 4.35, and March 25 to March 26 is 10.74. So this is the investment performance in last 5 years. Inception date, if we see, that is from 2012. So from last 14 years, it is been incepted. The fund size is about less than a bit 4 billion pound. Now, where exactly it is invested? Now, 32% is in North America, if we see geographical allocation. UK equity is 26%, UK bonds 14.4%, European ex-UK equities are 8.8%, overseas bonds 4.4%, other investment and other international equities 3.5%, and Asia Pacific ex-Japan is 2.6%. Japan equity is 0.9, cash is 7.2%. So that is top 9, 10 investments. If we see different industries, then bonds are 18.8%, technology 14.4%, industrial 13.9%, financial 12.8%, healthcare 12.7%, consumer discretionary 6.9%, utilities 3.7%, basic material 3.6%, and others left is 13.3%. The top 10 holdings are within this fund. Shell PLC is 2.7%, BAE System, which is aerospace and defense sector, 2.5%, Microsoft 2.5%, Amazon 2.3%. So these are the top 10 investments this particular fund have. Now I'll move to fund number 2. So this is fund number 2. Again, the launch or inception days is 2011. So from last 15 years, it's in the business. So this one has 10 years performance here. Starting from, we go from 25 to backward is 9.9, 10.4, 10.4, minus 10.9, 10.9, 8.4, 15, and so on. And if we go 12 months starting from, I think, March to March, 11.1, 3.3, 12.3, minus 5.9. So this is the performance here. And if we see the sectors, different sectors here, so the growth assets, defensive assets, cash and others are 0%. And if we see the top allocations, Fidelity Index Fund World, HSBC Global Funds, government bonds, and HSBC Global. So this is different top allocations. I will show you the third one, and then I'll go to the portfolio scan. Same here. This is about how big is this? This is about 7 billion pound invested here. Different people has invested in these funds. And the performance here, I can show, you can see that in here. 25, 26, 13.38, 10.83. So this is the performance for last 5, 10 years. Currency allocations, these are the currency allocations. Top 10 holdings, these are the top 10 holdings here. And fund number 3, and this is NVIDIA Corporation is 2.59, Apple 2.39, Alphabet, Microsoft, Amazon. So this is the percentage of top 10 holdings within this fund. And if we go in fund number 4, this is fund number 4, 60% equities fund. And if we see here, this is a performance in last 10 years from 2017 to 2026, so 9 years, 9, 10 years. So this is equity allocation in a different areas, fund or currency breakdown. So regional breakdown, North America 49%, UK 25%, Europe 9%, emerging markets 9%, Japan 9%, Asia ex Japan 4%. Fixed income, this is the percentage. So if you see these four funds, so that's about hundreds of funds, hundreds of stocks and share are in there, and it is all over the world. It's not just the investment in the UK or in one sector or in geographically one country. So now this is a portfolio scan. For example, fund number one has 25%, two has 25%, fund number three and four has 25%. So this is a cumulative performance in last 5 years from April 21 to now. So for example, if someone has invested here, and this is something like 7 to 8% return on average in last 5 years. It goes up and down, but that's how it is. So portfolio has year to date, this was made recently last week, actually 24th of April I make this. So till April, this is the performance 3.42, 3 months, it goes up and down, 6 months 4.12, 1 year is 19%, 3 years is 34.72, 5 years is 37%. These are all more than 10 years old, so it's 108% in 10 years. These particular four funds. This is a discrete performance in 0 to 12 months, 12 to 24, 24 to 36, 36, and 48 to 60 months. I will show you the asset split. So international equities is 24.49%. This is about whole portfolio. Europe ex-UK equities is 3.77. North American equities are 15.34. Global governors fix is 13.24. UK equities are 10%. Global corporate fixed investment is 8.71%. Geographically, international 28, UK 26, USA 13, North America 8, Japan 3.26%. That's for the whole portfolio. Looks like that the investments could be split in these countries. Sector-wise, mutual funds are 10.28%, financial 8.93, government bonds are 8.63, industrial are 7.7%. So this is a sector split as well, and you can see it is diversified as well. So yeah, I can stop here and we'll ask the questions.
Perfect.
The
Yeah.
portfolio which I show you,
Yes.
it shows the diversification in the geographical area and also in the sectors as well.
Yeah.
And also is hundreds of equities and
So I
bonds
think,
in there.
Khalid Saab, I think basically your advice for individuals is very straightforward, which is that everyone should first focus on pensions, after that focus on the ISAs, which as you've covered, everyone has an allowance of £20,000 per year for themselves, for their wife, that would be it additionally, and for their children, it could be also £9,000 each. After that, your recommendation is potentially GIAs and potentially to then maybe sit with a financial advisor and get some professional advice. Is that correct?
Yes, the advice will be for the pension investment as well. It could be for the ISA investment as well, and for GIA as well. So it's all in one. Advice can be in all in one.
Perfect. So we have
Not
a
just the
few.
surplus money after the ISA.
Oh, okay, understood.
Yeah.
So we had some questions, I think regarding some business. So self-employed person who has surplus funds sitting in their business bank account that are not needed for personal use, what are the most effective investment options for that money?
Yes, that's as it depends on the director's attitude to risk,
Yes.
their own preferences, if they want to invest in Sharia compliant, if they want to invest in a green or ESG,
Yeah.
or in the open market. So it depends on them. I cannot say that, this is good for you
Yeah.
until and unless we know that what exactly your risk tolerance is.
Right. And so for someone in that position where they do have these surplus funds, you would advise that probably the best action would be to sit with a financial advisor so they can have sort of individualized investment pathway for them.
Yes.
Perfect. And obviously the option would be one of these funds potentially. Um, Another member, Khalid Saab, is asking what is, I think they've written EFT, but I think they mean ETF.
Yeah.
Can you just go over what an ETF is briefly for those that are new to stocks and shares?
If you are new to stocks and shares, then do not invest in ETF. The ETF is exchange traded funds, yeah, is a type of investment funds that holds basket of same thing as OIC or unit trust. But ETFs are usually stands are more riskier than the OIC funds. So I don't advise on ETF anymore personally, but I usually advise on unit trust or OICs most of the time. But
Okay.
yes, if you have a good knowledge, you can do that. There are some people or advisors, they only advise on ETFs. They don't advise on the OICs or the unit trust.
Okay.
Me
Jazakallah.
personally, I don't advise anymore. I did advise in the past, but not anymore.
Okay. Can I ask why?
Well, I got more flexibility here, more diversification here,
Yes.
and more access to funds here. So I
Okay.
prefer here then, yeah.
Yeah. And the same individual is asking as well, what's your general advice on property investment in today's world?
Again, it depends on person. Some people they want to invest in properties, they want to see something.
Yeah.
But now in UK, the problems are like, especially the new rule comes in for the rental properties, and they
Yes.
have given a lot of rights to the tenants. A lot of it, a lot of investors are coming out of it even. They are
Mm.
selling their properties. They're not bothered about uh, rental income anymore. But again, it depends on some person. Some people, especially our Pakistani, we prefer to have a properties rather than in a stock market. But
Hmm.
yes, if they prefer that, that we should respect that. And yes, they should invest in the properties.
Jazakallah.
As a buy to let, yes, they can invest in the buy to let as well if they want. Yes.
Sure. And we have some questions just on, I think some more on the portfolio that you kindly shared with us. First of all, how is an equity different from a fund?
Well, the funds are made with equities and bonds.
Okay.
It could be 100% equities. If you are a high risk, then it could be 100% equities.
Yeah.
So these particular funds were like 60-40, 60% equities, 40% bonds.
Yeah, yeah. And just, I'm sure this is obvious to some people, but I guess we generally have funds that have higher investment in the US because their companies are the biggest companies in the world.
Yes, correct.
Yeah, so
If
that's
you
why they're
are,
generally weighted a bit more to US companies
if
than to other
if
markets.
you ask me to make a portfolio of 100% equities, for
Yes.
example, then usually 50-60% goes in US.
Yeah, yeah.
So the rest,
And
but we do have to diversify. We can't have 100% in US only. So if something happened to US, then what we're going to do? So we do diversify it on other geographical areas as well. But when we're talking about 100% equities fund, they are the better performing at the moment is we prefer to have 50-60% in US,
yeah.
not more than that.
Um, this is going to be the next question is going to be very difficult for you to answer, but I'm going to put it to you anyway because I think it's something everyone's sort of aware of at the moment. So the question is, we're in the middle of a war, so we don't know the end result, only Allah knows. How does one determine the risk level and sectors to invest as no one knows the future outcome?
Okay, we saw last, no, that's fine. This is a very good question. In
Yes.
last 5 years, we saw number one, COVID.
Yeah.
Then we saw Ukraine-Russia war, and then we saw a record of inflation rate. That was when usually when the inflation is high, then the market performs badly. So I have shown you if it is diversified properly, then yes, the market can temporarily go down. But overall, well, rather than doing nothing, yeah, you invest something. But if you are a very, very, very low risk, then yeah, put that in cash, wait for the things to be settled down, and then invest. But usually, medium kind of risk uh, is okay at the moment. We have no problem, no issue with that. It does go down, but it has up as well now.
And just on that quickly, Khalid Saab, what's your general advice on people holding cash? Should they hold cash? How much should they hold generally? What's your take on physical cash?
The physical cash usually should be 2 to 3 months, 3 months, minimum 3 months
Okay.
expense
Yeah,
of whatever your expense is.
sure.
So yeah, so that is ideal for as an emergency fund. On top of that can be invested.
Yeah, yeah. Next question is, should one prioritize stocks and shares ISA or pension contribution as a priority?
Uh, Again, depending on the person's income,
Hmm.
their savings, but minimum requirement is 12 to 15% minimum in pension, then ISA contribution, and the rest can be in the GIA.
Okay.
That's how it works.
And just on that as well, as you mentioned earlier, the government regulation is that everyone must offer 3% pension schemes. But obviously, for teachers, NHS workers, or government jobs, they have a much higher pension contribution. Um, should they be even more, keen to prioritize their pension than as opposed to sort of people that work in private sectors?
Okay, those 3% I mentioned, the employer contribution,
Yes.
and 5% from employee. Total minimum 8% contribution is a government guideline
Yeah.
for any person. Okay, that is minimum. So
Okay.
this is a correction. Secondly, those who are having a final salary pension, for example, NHS, teachers, or local authorities, pensions, police, fire brigade. So these type of pensions, obviously that you cannot add more, but if you have surplus fund, you can have a parallel a personal pension as well.
Yeah.
So it depends. Sometimes what happens is, for example,
Yeah.
NHS has a very good pension, no doubt of it. But sometimes if somebody has came from abroad and he is now 50 years of age, so he's
Yes.
not going to get a decent pension at the end of the his retirement. So
Of
then
course. So
then
the
he,
strategy there should be different. Yes. Yes.
yeah, it could be different strategy that he can have a personal pension as well as the government pension. And the if you are young like you are contributing in a final salary, usually they are quite good. Teachers, NHS, and NHS is obviously the doctors are getting very good pension. Even NHS staff, other staff as well, they are very
Yeah.
good pension as well.
One of the best. Just to our audience, we're going to put the poll out now. Please, if you wouldn't mind taking some time to fill out the poll, the feedback really helps us to enhance these sessions for everyone's benefit. And we'll just carry on with some questions. Khalid Saab, we haven't touched on this, but it's a very interesting point. It's a little bit tangential to the actual topic, but ethically, should we be thinking, it might be better to invest in something like China's markets over the US? How would you incorporate your ethical approach to investing?
Ethical approach or geographical approach. Ethical approach, we need to see the ethical funds to be invested,
Hmm.
which are mostly in Europe and US.
Hmm.
And if you are diversifying and looking at the investment return, Then China's or Asia or Africa, they are very high risky countries, number one. And uh, uh, the problems are their own regulations, which are sometimes is not favorable as well.
Hmm.
Regarding China, unfortunately, we do have investments sometimes in China as well. But the problem is, international market is not easy to understand the Chinese system or things. So these funds who are trading are less in China.
Hmm.
But if some investor comes in and he is interested in investing in China only or in Asia,
Hmm.
then a boutique advisory can also be made. But my suggestion, if you are asking me, it should not be geographically, particularly into China. It should be more towards the global side. And
Okay.
it does not mean that you have invested here, it's going to be stay here for 20, 30 years. It can be
Hmm.
changed.
Yeah,
6 months, year, it has to be reviewed regularly. I
sure.
mentioned that it has to be reviewed regularly. It's not the question that it's going to be stay there for life. If the better performing funds comes in, change it to from A to B, C to Z, to D. So rather than having the same portfolio, it can be changed as well. And the person can have a change of circumstances, change of risk profile as well. So it can be changed.
Yeah.
The
Thank
longer term,
you.
maybe China, Africa, something good comes in. But at the moment, for next 6 months, year, these are the best options.
Understood, Jazakallah. Another audience member has asked a question. I don't quite understand, but maybe it will make sense to you. What about cash setting in PayPal?
Cash setting in PayPal.
Yeah, I believe maybe some of these apps like PayPal have their own ISA that you can invest into. I think maybe that's what the
No,
member
don't know that.
is
If they
saying.
are,
But yeah,
they cannot advise, offer you advised all these platforms.
right.
You have to invest by yourself, either PayPal or XYZ, any other platform. You
Okay.
have to do by yourself,
Okay.
or you can have an advisor. Yeah, yes, there are some platforms.
Yeah.
I'm not sure about PayPal have it or not,
Yeah.
but in the UK, there are at least 15, 20 platforms minimum. I
Yeah.
know them.
Um, the next question is if you have got AVC, which stocks are best to invest into now? But I think you've mentioned before that you'd need to sit down with someone to know exactly what their investment strategy should be, what their goals are, to give a comprehensive answer for that.
Yeah. And again, I again say that the single stocks or shares is not advisable. Has to be a basket of stocks and shares rather than
Sure.
just single stock and share.
Yeah,
Yeah.
so maybe not invest into Amazon directly, but into a fund that includes Amazon, but
As
also is made up of maybe 40, 50 other.
yeah, yeah,
Okay.
yeah.
Another member is asking, can you give us a platform which is best to use for most stability?
There are some funds who can you can invest like AJ Bell has AJ Bell, Scottish Widows, Aviva. There are so many funds where you can do by yourself. Hargreaves Lansdowne as well.
Yeah.
So these are good platforms and they offer the same security as the any bank can offer you.
Okay. Jazakallah. Another member is asking, are you able to share the list of these 20 odd investing platforms? Um,
You can search on Google easy. It's not
Yeah.
that
So
difficult.
so basically we're talking about,
Yeah.
like
Yes.
You mentioned Hargreaves, Lansdowne, Trading 212, those.
No, I didn't set trading 212. I don't
Yeah.
know about them.
Okay.
There are some platforms who are offering CFD offer. I'm not talking about CFD,
Yes.
contract for derivatives.
Yeah.
I'm now talking about those.
Okay.
Yeah.
But you suggest that people should Google the more
Yeah. You can
reputable
have
sites and use
easily.
those.
Yeah.
Yeah.
But if you want to invest in 20 funds, that's not a good idea. You need to have one fund. one platform
Yeah.
to choose it,
Yeah.
and you can choose any of them. It's up to you. I just mentioned some names, but obviously you can Google it. There are
Okay.
yeah.
And someone else has posed a question. If someone's over the age of 75, would you have some quick general advice for that individual who's looking to invest?
Age of 75, depending on his circumstances, the best option for him is, first of all, he looks inheritance tax planning. The most important thing, I don't know about his pension, what about his pension at the moment is. Secondly, investments can be normal scenario. Bonds can be good option as well, uh, depending on his health and other things. Yes.
Okay.
Yeah.
Um, and I know this is going to be another difficult one, but what is the best investment in the UK at the moment? And obviously, you have to take into account risk and all that stuff, so it's
It
difficult.
depends.
But
Yeah, it's gonna be. It depends on everyone's risk profile.
yeah,
Can't say that, and I do not advise on a single equities.
yeah,
So I did mention just these different four funds.
sure,
If it
sure.
is a, but it comes under advice, and I cannot advise you under the FCA rules and regulation, like closing my eyes and say that, look, this is how it is.
Hmm.
Uh, Anyone who comes to me or advisor, they go, they sit down with them, they do all these risk profiling, and then after that, they make a report and present
Yeah,
with the relevant documents. It's not like, like this, where should I invest? Okay,
yeah.
invest in XYZ fund. It's not like that.
Absolutely.
Not a
Absolutely. I
professional
think
cannot
I
say
think
that.
yeah, I think that's an important takeaway message is that, it's irresponsible probably for people to just give general advice with specific funds, etc. It's much more sensible to sit down with someone and go through your whole financial portfolio. Khalid Saab, another question is, do you see cryptocurrencies being used in investment strategies and portfolios?
I don't advise on crypto. Never said anyone to invest in crypto.
Hmm.
Crypto is not authorized and regulated by the Financial Conduct Authority, neither it is authorized by the Bank of England, neither it is been authorized and regulated by any of the top G20 countries. So there's no point investing in crypto.
Understood.
Yeah.
Jazakallah. That I think that's it really. Brings us to the end of our session today. Jazakallah for all the audience members for tuning in and putting some really interesting questions. Khalid Saab, any final comments for our audience? We really appreciated your expertise. It's been very helpful.
Yeah, thank you very much for inviting me. And people are asking my contact details, so I can share you my telephone number. Can I?
Yes, you can. You can. I think your company is listed on the sort of the advertisement that went around as well. So I'm sure
Okay.
people can Google that as well.
No worries. So this is my telephone number. If somebody wants to contact me over the telephone, um, I can help him
Yes,
or in any scenario and whatever I can do.
yes. That's in the chat to all our audience members. So please do reach out if you do would like some individualized financial advice. But that's it for the session. Jazakallah for everyone for tuning in. Jazakallah.
Okay, Jazakallah. Oh, sorry. Sorry, the telephone number is sorry.
You're missing